You open your Chase statement on a Tuesday morning, and there it sits. $12 gone. Bank of America took 10. Wells Fargo, another 12. You do not remember signing up for this. Look at your last 3 statements. Add those fees together. Most people find $40, $50, even $60 they never knew was leaving. Now multiply that by 12 months. That is $720 a year bleeding out of an account you thought was free. You sit there thinking, when did this happen? I have been banking here for 15 years. Here is what nobody tells you. It did not happen overnight. The banks changed the rules, and they counted on you not noticing. I am Hendrik Bale. I have been watching bank fee structures for more than 2 decades. My father was an accountant. He taught me to read the fine print when everyone else skipped it. What I found in the last 90 days changed how I think about these 3 banks entirely. Chase, Bank of America, and Wells Fargo just restructured their checking accounts in ways that cost regular customers thousands of dollars annually. Not in fraud, not in penalties, in fees they buried in the terms you scrolled past. By the end of this chapter, you will know exactly which fees are hitting your account right now. You will see the 3 account types that are costing you the most money without your knowledge. And more importantly, I will show you the one move that saves you $200 to $600 every single year. But first, stay with me on something. There is one fee most people never see coming, and it can cost you more than all the others combined. I will show you which one near the end and how to spot it before it hits your balance. Open your statement right now. We are going to walk through this together. Your statement is still open on the table, and now we need to see what account type you are actually in. I open my own Chase statement first, and I look at the line item that says service fee. That line tells me which of 4 checking accounts I am holding, and it is the most important line on the entire page. Chase has a total checking at $12 a month, a secure banking at $4.95, a Premier Plus at $25, and a Sapphire at $25. The trap is this. Most people opened one account 10 or 15 years ago and never asked what tier they landed in. You may have been migrated. The bank does this quietly when they retire old product names. Here is what I do first. I find my statement date and look backwards 6 months in my online history. If the service fee jumped or changed names, the bank sent you a notice. You missed it. Bank of America runs the same trap, but worse. They have Safe Balance at $4.95, Advantage Plus at $12, and Advantage Relationship at $25. Wells Fargo runs everyday checking at $10, Clear Access at $5, Prime at $25, and Premier at $35. Now, the part most people miss. Each account has waiver conditions hidden in the fine print. The $12 account waives if you get $500 in direct deposits, or keep $1,500 sitting in the account, or move $5,000 across linked accounts. The $25 account needs either $10,000 or $20,000 in combined balance, depending on the bank. I have watched people pay $12 a month for 5 years because they did not know a single direct deposit would have erased it. The trap closes tighter because banks consolidate tiers every few years. Your old free checking account no longer exists. New customers cannot open it. The bank moves you to a tier that costs money and hopes you do not notice. And here is where it gets critical. Your next statement cycle is coming in the next week or 2. Before that cycle closes, you need to know which tier you are actually in and what it costs. Check your current fee schedule right now against your account agreement from when you opened it. The difference between those two documents is your trap. The silence around this shift is the real cost, not the fee itself, but the fact that nobody champions the move away from free checking. And next, I am going to show you the single move that ends this entirely. One action, no complexity, and I will show you which banks lock it in for life. Now that you have found your fee tier, you are ready to make the move that ends this cycle. I have watched hundreds of customers make this decision, and it takes one afternoon. The move is simple. Open a genuine fee-free checking account at an online bank or credit union. Let me show you what I mean by genuine. No hidden minimums, no balance traps, no fine print. Ally Bank offers their interest checking account with 0 monthly fees, period. No minimum balance required. They reimburse $10 per cycle in out-of-network ATM fees. Discover Bank runs a cashback debit account with no monthly charge, no overdraft fees, and 1% back on purchases up to $3,000 monthly. SoFi Bank combines checking and savings with early direct deposit, arriving 2 days before payday. Chime, partnered with Bancorp Bank, has no monthly fees, no minimum balance, and covers overdrafts up to $200 automatically. Capital One 360 taps 70,000 fee-free ATMs through Allpoint and MoneyPass networks nationwide. Here is what this means for your wallet. At Chase or Bank of America, you are paying $144 annually just to hold an account. Wells Fargo costs $120. Add overdraft fees, ATM fees, wire transfers, you hit $200 to $600 per year without noticing. At Ally or Discover, that number becomes 0. Genuinely 0. The switch itself takes 1 to 2 weeks. You update your direct deposit with your employer, redirect automatic bills, and transfer your balance. Most online banks provide a checklist or automated tool to help you move recurring payments. Opening an account takes 10 to 15 minutes. Social Security number, government ID, initial deposit starting at $0 to $25. Your deposits are insured identically. FDIC insurance at banks, NCUA at credit unions, both protect up to $250,000 per account. Fraud protection under Regulation E applies equally everywhere. Your debit card is as safe at Ally as at Chase. Credit unions work differently. They are member-owned nonprofits, meaning profits return to you as lower fees and better rates, not to shareholders. Navy Federal, Alliant, and PenFed credit unions offer free checking with broad membership. Many require only a small donation to join an affiliated nonprofit. The COOP network gives you access to 5,000 credit union branches nationwide. Allpoint reaches 55,000 ATMs globally. Now, I want you to understand something crucial about what happens next. You will move your money, and the fees will stop. But the banks you left will still have products locked and waiting. What determines whether you truly escape or get pulled back in is what you do in the next 30 days. And that is where the permanent lock comes into play. You have now switched your money. Your old account sits dormant, untouched. Here is where 90% of people make the single mistake that ruins the entire plan. They close the old account. The moment they do, the door slams shut. I learned this the hard way in 1998 when a client closed his Wells Fargo checking. 3 months later, an old utility company tried to process a delayed rebate check. Nowhere to land it. The account was gone. The check bounced. He paid $30. This is the thing I promised you at the start, and I did not lie about it. The preemptive lock-in is not about moving money. It is about never closing the old one. You leave it open. Zero balance, no deposits, a shell, untouched for 1 full year. Why? Because the old banks measure success by account closure rates, not by balances. When you leave an account open and dormant, you send a signal they cannot ignore. You are saying, I have other places to keep my money now. I am not coming back. That signal, multiplied across thousands of customers, is what changes their pricing calculus. But here is the mechanism. An open dormant account costs them money to maintain. They pay to process statements, to hold your name in their system, to ensure your $0. After 12 months of watching you not use it, they know you are permanently gone. That is when the real banks lower their fees. Not because regulations force them, because you left. Now, look at what we have just walked through together. You spotted the hidden fee on your statement, the thing nobody reads. You identified your account type and compared it to the original offer you accepted. You opened a new account at an institution that guarantees 0 monthly maintenance. You moved your direct deposit and set up bill pay. 1 to 2 weeks. Done. You left the old account standing empty, a monument to the choice you made. And within 30 days, you have severed the mechanism that was draining you. Your statement will arrive. No fee line, no erosion. When you see that first 0 where the charge used to sit, you will know it worked. That is the moment I want you to notice. That is the payoff. Now, here is my question for you. Did your bank send you a retention offer once you started the switch? I read every comment you leave. Tell me what yours said, if they tried. Because the banks that fight to keep you are the ones most desperate about their own numbers. And that tells us everything we need to know about where this industry is heading.